What if I told you that your investments are not the most important part of a successful retirement? We've seen portfolios with $3 million that have been in danger of running out of money. Now, don't get me wrong, your portfolio is still a big part of your retirement, but there are various factors that really make a difference and can add massive value back to your wealth. On the other hand, not being prepared, or worse, getting something wrong, can cost you dearly financially, emotionally, and in some cases, in your relationships. So let's jump in. First up is your taxes. A lot of federal employees think that their taxes are going to get simpler when they retire. And folks, I'm sorry to break the news to you, it's actually the opposite. You see, as a federal employee, you really didn't have too much control over taxes. Maybe you had a rental income or some investments, but when you're retired, you get to design what your income and investment plans look like, and where there is design, there can be tax efficiency. For instance, when you first retire, you enter what we call your tax planning window. And excuse my handwriting there. And this is when your income goes from being high because you were working and earning a salary to being lower because all that's taxable at this point are your FERS pension and part of Social Security. Now, at some point, time will pass and you will be of RMD age, or required minimum distribution. This is when you have to take out money from your retirement account and pay taxes, so your taxes are back up again. But this window of time in the middle is where all the magic gets to happen. And folks, if you've not already done this, you need to go back and incorporate this in your plan. Think about how much money you're saving in all of those years by simply planning your income and investment strategies accordingly during this phase. Our clients have realized that the things they need to do in retirement to be successful look a little bit different than what's been successful for them up to that point. And this tax planning window is one of the big ones. There are things like Roth conversions that you can do during this phase. And a lot of people incorporate tax loss harvesting strategies within here as well. So folks, really make sure you understand this piece and make sure you're utilizing it in your plan. And really, that's what this channel is all about. We take an evidence-based and educational approach to retirement planning. So if this is the kind of thing you like learning about, then consider subscribing to the channel and maybe even sending it to somebody you know. Okay, the next hurdle you need to consider is your health care. The AARP says that nearly 70% of Americans who reach age 65 will someday require help from others to get through their day. On average, women will need help for 3.7 years and men for 2.2 years. Folks, those are some serious numbers, and federal employees need to be considering how this could impact their future plans. Healthcare has gotten extremely expensive over the years, and so a lot of feds have looked to federal long-term care insurance or private long-term care insurance to help cover some of those costs. And the federal long-term care insurance program was actually a viable option, except it's no longer available to anyone who wasn't already in the program. It got pulled off the shelf for a number of reasons, but one of them is probably because the costs were getting out of control. So as retirement planners, we're having these kinds of conversations with our clients on a regular basis. And here's how we typically address this risk. You really only have two ways of addressing long-term care and the needs around it. The first one is paying for it outright. Obviously, you need to have the assets to be able to handle this kind of expense if it becomes a reality. One of our clients was in an assisted living facility not too long ago for the later portion of their lives, and the costs affiliated with that facility were around $100,000 a year. And so if we think about the AARP numbers of 3.7 and 2.2 years, we're talking as much as $370,000 for women and $220,000 for men during that long-term care event. That's a rather significant portion that your portfolio is going to have to absorb if you're self-insured. And remember, $100,000 a year was in today's dollars, and so inflation is going to actually make that value much larger. And so you need to be thinking, what is the possible cost for when I will need long-term care insurance, and will I have sufficient assets to cover that need? Now, of course, the other way to address this risk is to pass the risk on to an insurance company. Now, this too can be expensive because there are annual premiums that you're going to need to pay every single year. And for a lot of traditional long-term care insurance, the costs keep going up as you age, and so it becomes prohibitively expensive for a lot of families later in life. And what we find is often people begin to drop the insurance coverage, possibly when they may need it the most, simply because they can't afford to keep making those premium payments, or they'd rather use that money for something else. So it's a tough decision. How should federal employees address this risk? Well, here's one thing that you can do, and this is what our clients have told us has been really helpful for them. But in essence, you create two side-by-side scenarios for your long-term care situation. The first one is with long-term care insurance, so you have those premiums every year, but then you're covered for a long-term care event. And the other is without the long-term care insurance. And you simply look at the projections and see which one looks better for you. Does it make sense to pay for a long-term care insurance for all of those years, but at least you're covered? Versus we don't pay for it at all, but then we have a huge payment or large payments that need to be made later in life. And so when you have two side-by-side scenarios like this, you have an apples-to-apples comparison and context from which to make a better decision for your family. And folks, I will tell you, for some of our clients, it has been a slam dunk. Get the long-term care insurance, definitely worth the cost. But there have been others where the case has been less clear. With the long-term care insurance, there's no guarantee that you'll actually have a long-term care event, but those permanent costs around the insurance policy will continue to be there. Whereas if you self-insure, maybe you never use the money. But this is a risk you have to address. If you self-insure and you don't have the money, then what is that gonna do to your circumstance then? Okay, so lots of things to keep in mind. And if you found any of this helpful so far, will you hit the thumbs up on the video for us? Okay, and the next hurdle to be accounting for is unexpected deaths. What happens in a circumstance where a federal employee dies within the first few years of retirement? Well, there are a few issues that come up. The first being, do you have all of the legal documents in place so that your family can just take it from there? For instance, if you fall ill and you're incapacitated and you can't make decisions for yourself, do you have the power of attorney and advanced medical directives in place so that the appropriate people can come in and help you? As well as the two I just mentioned, you want to incorporate things like wills and trusts, and there's various things that can be helpful in achieving your goals. The other thing is, do they know where to find it? Is it easily accessible in a time of need? And similarly, are there other things that they may need access to, maybe like your emails or certain accounts, passwords that maybe only you have access to? How are they able to get those things if you're not here? There are some software out there that can be really helpful with this, and I'm not going to give you any recommendations. You have to research that on your own, but just know that they're out there. And the other part is, if you're the primary person that deals with the economics and the financial person of the family, do you have a team in place that's going to be there to help transition to your family and help your family make decisions if you're gone? These are all things you should be thinking about as you create your plan moving forward. Now, a death can be tragic from a financial standpoint as well, right? What happens to your family's income when you die? Well, depending on whether on your FERS pension you elected something called a survivor benefit pension, that's going to determine how much income your family is going to continue to receive in your early demise. There's 3 tiers, the first one being 50% of what your benefit was if you're gone, 25%, or 0%. Obviously, there are some costs: 10% annual cost for leaving half of your pension behind, 5% annual cost for leaving a quarter of your pension behind, and 0 is obviously free. So at a minimum, there's at least half of your FERS pension that will no longer be coming into your family. There is also 1 Social Security that's going to be removed as well. When one spouse member passes, you only get to keep 1 Social Security. Now, it is the higher amount, and so whether it's yours or theirs, they're still going to have 1 form of guaranteed income plus a minimum of half of your FERS pension that just is gone from their overall income. And so when you think about how much money will still be in your family in an event like that, are there still enough assets in the family so that they can continue to live financially independent? And if you identify this through some modeling as well, and perhaps you decide, hey, there just aren't enough assets, that maybe they'd have to sell the house or things like that, then you want to consider supplementing that gap with something like possibly FEGLI or a term life insurance or various other ways that you can help solve that problem. And if you're looking for some help in your own retirement planning, then you can send me a message directly from our website. Our team's going to put a link in the description below for you. And until next time, stay wise and stay wealthy.